Good afternoon. It is Tuesday, Election Day, November 7th, 4:40 p.m. Markets have been closed for 40 minutes now. A real dry day today in the markets, really. Nothing too exciting at all, really. Dow, if you could believe it, the Dow ended up again. Squeaked out a small profit. S&P was flat. Nasdaq was down slightly. Just a real quiet day, but nonetheless, the Dow managed to end up in the green again. Gold took it on the chin. Kind of came back a little. Still down about $5-6, but that 1280 now is really starting to be a little hard resistance. Took a picture of it. I showed you those pictures once before of the manipulation. This was earlier today. Look what they do to this gold. It's so obvious. Can you see that? Boom! There it is. Makes a nice move up. Starts out at 1278. They take it down to 1275. Starts the rally strong, hits 1280. And then boom! They hit it. That's what they do. That's what they're going to continue to do. It's like, what's that nursery, that children's song? Here we go loop-de-loo. Here we go loop-de-la. It goes up a little. Then it goes back down again. And we go nowhere. Here we go loop-de-loo. That's all it is. That's all it is. Okay? We've been in this range. It's Chinese water torture. Janet Yellen said, this Fed normalization will be like watching paint dry. I said it will be Chinese water torture for gold. So that's it. It's election day. And it's been a year. It's been a year. You remember that night as it was becoming apparent that Trump was going to win? Gold was up $50, $60, $70, right? Stocks were limit down. I think the Dow was down 800 points, right? And then it just reversed. It all just reversed by the next morning. I mean, how do you explain that? Nothing is real here. Nothing is real. Stocks were down. The Dow was down 800 points, limit down. Okay? Remember all those people? All these CEOs that said, oh, if Trump gets elected, stocks are going to crash. The economy is going to crash. You know what? Yeah, right. They either were lying through their teeth, okay, or they're incredibly incompetent and clueless. It's one of the other people. I said that once before. So they've lost all credibility. And at the same time, you remember all those pumpers in gold? Oh, Trump likes gold. Yeah, Trump likes gold. Nonsense. Stop listening to people that have been getting it wrong. Start listening to the people that have been getting it right. Oh, Trump likes gold. Yeah, he likes it on his toilet seats and his walls. That's where he likes gold, okay? He likes it on his watches, okay? Trump likes gold. Since he's been elected, Dow Jones Industrial Average, a year ago, 18,847. Today it's 23,557. It's up 25%. 25% the Dow in 1 year since Trump. So much for Trump is going to crash stocks. The Nasdaq started out 52.37. It's now 67.67. It's up 30% in 1 year. 30% since Trump got elected. The S&P 500, that's the laggard in the group. It's only up 20%, okay? So that's where we're at, people. The dollar was up a little. That's what put pressure on gold. 94.90. It's up about 19 cents. Oil came back down a little. Still over $57 a barrel. Got to watch that. I think the big thing, though, we've heard it all day. This flattening yield curve. Flattening yield curve. I think this is important. You see, you could get distracted with a lot of noise. But I think this is, we have to keep our eyes on this. Okay? The gap between U.S. short-dated and long-dated Treasury yields. Now, this was on Monday. Shrank to its tightest levels in a decade, as sluggish domestic inflation underpinned demand for longer maturity government bonds. Okay? High expectations the Federal Reserve would raise short-term interest rates at its December policy meeting. Now it's about 90%. It's baked in. They're going to raise interest rates 0.25% in December. Okay, so that'll bring up the short end of the curve a little, right? To help with the flattening, right? And uncertainty over whether Republicans could pass their plan to change federal tax codes have also flattened the yield curve. The yield curve typically flattens when the Fed raising rates. We also have decent growth and low inflation, said Eric Stein, co-director of the Global Income Group at Eaton Vance in Boston. The yield spread between 2-year and 10-year treasuries broke just below 70 basis points, a level last seen in November 2007. You got to go back 2007 to see this tight spread. This is important. So while all this other noise is going on, okay, this is pretty important, okay? Monday's yield flattening was led by the fall in longer dated yields, with the 30-year yield hitting its lowest level since late September, okay? So you got the 3-month is 1.187, 6-month 1.3, 2-year 1.6, 3-year 1.7, 5-year 1.9, 7-year 2.1, the 10-year 2.33, right? And the 30-year 2.80, okay? Listen to this. Since 1990, a normal yield curve has yields on 30-year Treasury bonds typically 2.3 percentage points, also known as 230 basis points, higher than the yield on 3-month Treasury bills. So the spread between the 3 months and the 30-year, 2.3 percentage. And I just said to you the 3-month is 1.187 and the 30-year is 2.8. You're looking at basically 1.7. Going back to 1990. The normal yield is 2.3. This is tight, people. When this spread gets wider than that, causing the slope of the yield curve to steepen, long-term bond investors are sending a message about what they think of economic growth and inflation. Okay? But they're sending a message right here. Definitely sending a message. Okay? So we have to watch this. U.S. Treasury yields fell on Tuesday, flattening the yield curve to a level not seen in a decade. Okay, as $24 billion worth of 3-year government debt, the first leg of this week's $64 billion quarterly refunding, fetched average demand. The drop in longer dated yields, with 30-year yields touching a 6-week low, pinned short-term gauges of Treasury market volatility near all-time lows. Okay, so this is what we need to pay attention to. All right, so yeah, we're in a raging stock market. You can get rich with Bitcoin. It's going to $1 million. Okay, gold and silver are doing nothing. All right, but this is what we really need to focus our attention on. Let's watch this flattening yield curve. Okay. Because this is where it's going to tip its hand, okay? It's tipping its hand here. So that's it, pretty much quiet day otherwise. We'll see what happens tomorrow. Gold continues just to be stuck in the mud, going nowhere. All right, really going nowhere here. It's in this range, not doing much of anything. How long can this continue? I don't know. I've showed you charts. It could last 5 years. It could last 10 years, based on history. Nobody can say it can't. Anybody who tells you they know better, no, watch your wallet. So that's it. Have a good day, people. Ciao.